Good afternoon, everyone. This is Christy with Van Houten Company. It's Tuesday, November 15th. I'm going to go over the markets with you. Found some late buying into this day. Really flat prices majority of the time for commodities in general. And then these grains found some buying coming in late. Really off the fact that you could just seem to not be able to break these support levels on a technical side of things, and so it's looking like maybe a new wave of buyer might come in here. Fundamentally, nothing's changed. The dollar really didn't do much today, so it really hadn't had to do much with that. So it looked like more of a technical trade, just that you weren't able to break that support line. It looked like a buying opportunity there. Corn up 3 to 4 cents, beans up 5 to 6 cents on the close. Wheat market up anywhere from 2 to 5 cents as well. Meat markets, cattle markets continuing to have some support with this snowstorm that's supposed to move through a lot of the Midwest, and so live cattle, feeder cattle just slightly higher. Lean hogs breaking off once again, being able to close off their lows, but down almost $1 on the day. Outside markets, you know, for the dollar to be quiet, that's the first time it's really been quiet in about a week now since the election. Same with the Dow market, quiet. That hasn't happened in a while either. So it seems like they're running out a little bit of steam as you're starting to get a little bit of top heavy because they've really rallied over the last week or so. Crude market was the biggest market mover of the day. Didn't do a whole lot until about noon or so when you came out here that Venezuela's president is going to come in here and have talks with OPEC. So the whole reason you have crude market as low as it is we are dealing with a lot of production on hand right now. So you do need a production cut or a problem to occur in some location. And they're trying to get everyone on board out of OPEC that every country cuts production a little bit so no one's the short end of the stick. They just haven't been able to get everyone on board, and that's been one of the countries that's been against it. And so it does sound like these lower price levels are just getting to be too much. It doesn't know for sure if you'll see a cut. But they're starting to talk about it, which is a positive direction as far as OPEC's concerned. So maybe you'll see some cuts there, and that's when you had crude bounce 250 higher on the day there. So big move. Otherwise, everything's else been relatively quiet. It did come out that Managed Money was aggressive buyers of both both soybeans and corn. They've gone from about net short of about 180,000 contracts to they're currently net short about 28,000 contracts. So they've been aggressive buyers of corn over the last month and a half or so. So that is something to note. They are almost par as far as the chart goes. I do have to close with the disclaimer: trading in futures and options involves risk of loss and may not be suitable for all producers. Have a great day.